So just last day, I was discussing about regrets in trading, and today I want to bring another topic, but which is just the opposite of what I discussed with you last day, right? So what happened is that on that same day, by towards the end of the day, I think I had took another trade, and it worked extremely well the next morning, right? So I missed one trade, and the other trade which I took worked extremely well, and it went more than 8 hour, and I still have a small portion running on it. And so basically, I lost 2 hour that day, and the other took trade I took just went up 8 hour. So the topic I want to discuss is basically this one here, which is basically the forgiving nature of trading, right? So trading is a business of business which forgives you a lot, right? This is one topic which I wanted to discuss. So what do I mean by this one topic, right? So just before I jump into the trade itself, I just want to give you an example. So imagine you are running a small business in India, maybe in India, um, towards the end of 2000s. So you are, let's say, imagine that you are running a business, a CD business in India, right? So Netflix is not that popular. I don't know whether Netflix was there, but yeah, not Netflix is not that popular. You're still running a CD business, and you're doing pretty well in your small town. And one day, somebody from, let's say, United States, a friend of yours, who just comes to you, and he told you that, hey, look, this business is going to be obsolete very soon. There is this company called Netflix, which has started streaming all these movies online. Sooner or later, your business is going to be obsolete. So you basically are running a business successful. So you are now, instead of listening to him, you, in all your wisdom, you're very reluctant, and you decided, let let me not listen to this guy. I think it's all going to be working fine. I will just continue with this business. So you know what will happen to you, right? You will basically lose your entire business just because of that one particular wrong decision which you made in life, right? And that's the opposite of trading. Trading is very forgiving. You get to make mistakes very often, and you will make a lot of mistakes. That's why you have risk management. That's why you have stop loss. That's why we always say, a trader, any good trader will always say, you have to build failure into your process. So you have to be ready to failure in order to succeed in this trading, right? You have to fail a lot. A lot of good traders, they say they don't need to win more than 50% of their trading. They don't need to win more than 40% of their trading. Even there are millionaire traders who has been successful with less than 30% of win rate, right? So Kolamagi, for an example, I think he might have said that he win only 30% of the trades, right? And he went on to turn a meager sum of $5,000 into 100 million, right? That's what he did with a 30 percentage win rate. So failure is part of this business, and it's a very forgiving business. I will just take you through one more example, then I will go to the chart. So imagine, not just a small ship owner, you are the CEO of Kodak. One day, one of your executives comes and tell you, "Hey, sir, um, there is this thing called digital cameras now. Film cameras are going to be obsolete. We should move into digital cameras." So, instead of listening to that guy, you decided, no, the film cameras are going to stay. Our business is intact. We have a lot of cash in our hand. So that one decision, you know what happened to that particular company, right? So history has given you a lot of examples. So the good thing about trading has is a forgiving business. It forgives your mistakes. it encourages you to fail a lot. And when you embrace failure, and when you make failure the part of your strategy, you will succeed. That's the only way to succeed in trading. It's not through high win rate. It's not through finding a magic bullet. It's not through finding a trading setup where you have 90%, 80%, 70% win rate. No, that's not how you can do it. That's the way you have to do it is find your edge, define your stop loss first, take small risk, 1 hour risk to make 8 hour, like in my case, right? And yeah, that's how we should be doing. So just wanted to give, let me try to zoom out. So I'm just trying this video streaming kind of thing for the second time in my life. First time was last day, and this is my second time. So I don't know much about this. I promise I will learn a bit more about all this stuff. But yeah, so this is one trade which I took right here. So you can see that the previous day high was here, and I was looking at this one particular trade, Sansera Engineering. I think this company has a lot of promise. So I had read a lot about this company, and I had a basic idea of this company. I'm not a fundamental investor. I don't go deep into the value investing fundamental part of that. But this company, yeah, I think it's probably going places. But anyway, not an off topic. So this is where I took the trade, right? At the When this high was broken, I had my order. uh, the entire day just floated around. It didn't hit my stop loss. It didn't give me much problem for that particular day. Next day, market opened. This magic happened, right? Look at this monstrous gap up. So if you see, I put trade like this, yeah, just like this. So my stop loss was somewhere around, and it just gave me by that day, it gave me like 7 hour kind of thing. And look at where it went, right? Uh, yeah, 8 hour plus, 8 hour plus. So yeah, that's what I just wanted to tell. The forgiving nature of trading. And this is a wonderful business to be in, if you pay attention, if you plan it, if you do trading well, if you take this as a serious business. I'm planning to do a series on how to start trading from a technical point of view. Yeah, that should come in the right time. I'm a lazy person, so I don't usually get time, or I don't find time. Other than trading, I do work on a full-time job. So yeah, that's it. Thank you.